Hello, my name's Charles Lastic. I'm the Managing Director of Blue Bond Tax Planning. We've been inheritance tax specialists for more than 18 years and have helped hundreds of clients save millions of pounds on their inheritance tax planning. And today's video is around the quite complex subject of the residential nil rate band and how you may be able to save £70,000 of inheritance tax by utilising trusts properly inside of your wills when the first person in a married couple dies. Hello and welcome back. So today's video is around how you could potentially save £70,000 of inheritance tax by protecting your residential nil rate band, and this is the residential nil rate band of the first person to die in a married couple. So it only affects married couple or people in civil partnerships in the UK. So the residential nil rate band is unusually complicated as a piece of tax legislation. It does get reduced by £1 for every £2 when a person's estate is over £2 million. So if you die, and that's usually the second spouse, dies with an estate of 2,350,000, you are at risk of losing the whole residential nil rate band, which is 175. Yeah. So the impact of that would be 40% of 175,000, which is more tax to pay, which is a £70,000 of loss to the estate in inheritance tax. Now, it's quite difficult to protect the second residential nil rate band of the surviving spouse. However, it is relatively straightforward to protect the first person's residential nil rate band. Now, if in the will the residential nil rate band of the first person to die is transferred to the surviving spouse, there is a risk of that person losing that residential nil rate band as well. Now, a lot of lawyers overlook this possibility of protecting the first person to die's residential nil rate band because, to be fair, they're not tax planners, and this is a tax planning exercise effectively. So when we are planning with our clients, assess the estate when the first person dies. Now, this is presuming that the clients have put the option into the wills that we've done for them to protect the residential nil rate band. Now, it's important this is done at the outset of writing the new wills. So, as I say, we assess the estate after the first person dies, and we determine by projections, in other words, we project the value of assets over time, and then we say, is that estate likely to grow to more than 2,350,000? If the answer is yes, then we would claim, if there's any chance, in fact, then we claim the first residential nil rate band using an immediate post-death interest trust, or IPD. So basically, the residential nil rate band is claimed, the allowance is placed into an immediate post-death interest trust, but this is on behalf of the children and is therefore not in the surviving spouse's estate because it's claimed on behalf of the children who are direct descendants. Once again, most lawyers are not aware that an IPD can be put into place because the beneficiaries of this trust are direct descendants. So normally the residential nil rate band has to be passed to a direct descendant, but it can also be passed to a trust which the beneficiaries are direct descendants, which is what we're doing in this case. So there may be some capital gains tax on the growth of the 175 inside of that trust over time, but that's probably significantly less than the inheritance tax that would be payable and the loss of that £70,000. So Effectively, there may be some capital gains tax while it's still being held by a surviving spouse, but it can be alleviated by depending upon the number of children and grandchildren, because the beneficiaries of that IPD are my children and my grandchildren. And yeah, everybody has capital gains tax allowances, admittedly not very much going forward. So, but it's still going to be less, the capital gains tax, than the inheritance tax of losing that residential nil rate band. So with this methodology, you can save the estate more than £70,000, and it's certainly worth considering, but it does need to be written into the wills when the estate planning is being done. So again, this is all part of the more complex work that we do for our clients with estate planning, because it's not just making sure the right money goes to the right people, it's trying to save tax for married couples, especially on the value of their main residences. Okay, hopefully you found that useful. If you did, give us a like. Thanks very much for listening, and bye for now. Bye.